Hello, good morning, welcome to Core Finance. I'm Matt Brown, I'm joined by Mike van Dulken, who is Head of Research at Accendo Markets. And we're going to look first off this morning at crude, both Brent and US light crude. Starting off with Brent. Now, I mean, crude actually hasn't really been on the radar that much over the summer. It's all gone a little quiet and actually kind of feels like it's caught in a range. But in the meantime, are we looking at a breakout here?
I mean, technically we still are in a range, $45 to $60, but I think it's the, as you say, it seemed relatively quiet over the summer. It's actually been a fair bounce from the mid to the end of June, all the way up through 50, which then turned supportive, and then up through 55 recently. So I think there's potential for us to move on and challenge the 2017 highs around $58. Nothing much really came of the non-OPEC meeting on Friday. I think we're still headed in the same direction, which is, as much as they can curtail production, it now seems to be they're moving more towards focusing on not exporting too much, because that was the problem. Stop production, but just release all your inventories to buoy prices and keep the oil-reliant nations in a better position, because they've been hit so hard. So for the moment, kind of steady as she goes.
Fantastic. And do you think this upward move, certainly from mid-June, dollar weakness or supply and demand on crude itself, or a little bit of both, do you think?
I wonder whether, I think more the relief that the supply-demand situation hasn't got any worse. I mean, has it got much better? Possibly not, but it's not got any worse. So that perhaps says that at least these efforts are not in vain. There was a while back where we thought this is just totally a waste of time. So I think for the moment it's okay. The question is, do we hit resistance and then start seeing, because of a huge inflow of production? But if we look at and I think we'll look at the US chart a bit later.
Have a look at the US.
The US rig count has actually kind of plateaued a bit, which suggests that the shale and the frackers, the guys who had been the reason for keeping oil price down, that has slowed up, which will reduce the huge inflows of supply, which can remove the ceiling, if you like, for oil pushing a bit further north. So that could all work out okay. I mean, it had been that Saudi Arabia was the de facto swing producer. Then we were saying no, it's more the US guys who are more nimble. They can rush in at 45, and they can mothball things at 58 when they're doing okay. So. For the moment, it seems to be going in the right direction. The US, however, seems to be the one which may be approaching bigger resistance, around $51. As you say, we're nowhere near 2017 highs yet. So if anything, Brent's the one that's been outperforming. And I believe the spread is actually the widest in quite a while, over $6.50.
So one to look out for there. Brilliant. Mike, thank you very much for joining us today.
Thank you.